Hello, everybody out there in social media land. Welcome to the Loretta McNary Show. Oh my goodness, I'm super excited about today's show. Anytime I can have an amazing guest on with credentials that are out the Yahoo, right? And then bring a great topic. I'm super excited about this, as I am about every show, but this is going to be a different show. We're not here to entertain you, although when Madeline and I get together, stuff just happens. You know, our best intent, we're friends, so we have a good time, but she is so knowledgeable. Get your questions ready. Type them in the comments and I will try to read them and we'll get to as many as we can, but we want to make sure we get this information out. Hi, Madeline. I'm going to read some of your bio. You want to say hello?
Thank you for inviting me to your show.
Yeah, let me turn your volume up some so that they can make sure they hear you. So my friend, she's a private practice, tax, estate planning, and entertainment attorney with an extensive track record of providing legal counsel and saving clients, get this, just one person, close to $1 million in tax recovery and penalty waivers. Attorney Savage-Townes has been awarded the Attorney for Justice Award by the Tennessee Supreme Court on how many times? Numerous times, where she now holds the title Attorney for Justice. Congratulations on that. And I'm not done. I've got to get to one of my favorite parts. And I shared it so everybody can see that, but I want to share this part right here about that appointment from, oh my goodness. So, Attorney Savage-Townes served as the first African American woman to serve as the vice chair of the Small Business Self-Employed section of the National IRS Advisory Council in Washington, D.C., nonetheless, under President Obama, that affirmed her appointment on the council. So, I'm going to stop there. You're already getting hearts and a lot of thumbs up. So let's get this party started. Comments are welcome. So tell us about your background, because you being an attorney was like plan B.
Yes and no, but yes, it was Plan B. Actually, I started in corporate America in management field and then accounting and worked my way up that way. And then so once I got through the management track, I realized that this is not what I want to do the rest of my life. So I was, always wanted to be an attorney, wanted to be an entertainment attorney. That came from my background in Nashville, having undergrad, went to Fisk University, was a part of the gospel choir and other singing groups, so knew kind of the backhand deal of the entertainment world. But fell in love with tax actually after I got in law school when I realized my accounting degree was what was carrying me through. Uh, I couldn't last in crim law. Did when I know a person is guilty, then I still have to get them off, and couldn't last in family law because I'm crying because they have child abuse cases or divorce, and so I found my niche, which was tax law, and then just kind of took my practice on from there.
I'm just so happy and proud of you, proud to be your friend and to know you. So, tax law. And you not only studied and you know it and you've helped people, but you to me are a master at tax law. You keep up with all the changes, and as soon as you learn a new one, you got to learn another one because something else has happened. So tell us about what's going on now. Let's start with 2020.
Okay.
And with the COVID-19 and all the stimulus money, we just gonna jump right in there.
Right. There are a lot. This 2020 kind of took everybody through a whole different genre of changes, especially when it came to tax law, when it came to employment, income, whether I'm getting income, unemployment, my small business, if I got a loan, if I didn't get a loan. So there are a lot of ever changing rules. And so we're all literally probably all playing it by ear. But as my go-to is always be conservative and let's follow the law until it says it changes to something else. But a lot of your tax changes for 2020 came under the CARES Act of 2020, and they dealt with a lot of the, of course, pandemic. Even in 2020, we dealt with a lot of natural disasters. We had a lot of military people still overseas, and how do we incorporate them into the tax filing season and things like that. So the CARES Act really stretched out and tried to encompass some of the things, current things that we were going through. As you will find this year when you file your returns, that a lot of the returns are more simplified. We used to have like 30 and 40 pages of returns. Now they're pretty much down to a couple sheets, and then some of them are even cut off. But they're trying to simplify and flatten the tax rate so that everybody can not necessarily be on the same page, but it's more simple. Because then we kind of avoid tax fraud, kind of avoid people being cheated out of taxes who probably are owed a better refund, but they didn't understand the tax code. So it is a more simplified version for all of us to better understand, and so that people are not being cheated, and then people are cheating on their taxes.
We're going to get into that too, because it's not always the government. They have to put these things in place because we know, and probably some of us know, somebody who has cheated on their taxes. And it's not like people think if I just count if I pay somebody to carry their dependent, that's not cheating. But that's cheating, right? Is that cheating?
That's cheating. There are rules, and we'll kind of go over that when we start talking about the qualified dependents and earned income credit, because that's always a good question. But the key to that, there are rules as to who qualifies as a dependent on your return. And they have to have lived with you. They have to. Some of them have to. You have to have a birth certificate in some instances, or school records, or something showing that they live with you. They are your dependent. They are your child. If they're not your child, do you have the legal documents, adoption, conservatorship, guardianship, things like that, that will qualify you to carry them. There are some specialized instances where you can carry someone that is not your child, but they're very specific about those rules.
And you have to have some kind of documentation too, right?
Documentation,
not just somebody's word.
Right. Oh, documentation must be there. I mean, you can put it on there, but if you ever get audited, you do not want those troubles.
Yeah, because honey, I definitely don't want that trouble. So I'm always concerned about grandparents who are having to raise their grandchildren and take care of them because there's no formal documentation, but they are truly taking care of these grandkids. Everybody knows they are. So how are they protected, or what can they do to make sure they can carry that child as a dependent? Because the mom and dad, for whatever reason, it could be they're overseas serving the country, or it could be they're down the street on crack. We don't know the circumstances, but I do know a lot of cases where grandparents are raising grandchildren. So how do we help them?
And that's true. A lot of that will be in your school documentation, things like that, because they will pretty much be serving as the guardian parent, contact for emergency. If they have lived with you for, that full year, more than 6 months, you can carry them. Usually medical records, if they're the person taking that child to the doctor, they're going to be the, contact person or the guardian listed, though they may not have the guardianship by legal terms. I mean, the guardian, they've gone to court and gotten that authorization, but they are holding themselves out. And then they have that supporting document, school records, medical records, or emergency contact. They have, can show proof that this child has lived with them, affidavits of, people that live in the household. Yes, Johnny lives with grandma for these years. Parent is unknown. For people that's overseas, they have a lot other special rules for that, because their parent really probably needs to carry their child, even though they're overseas. But they can waive that, parental right for that moment while they're being overseas to have that other grandparent or guardian. Sometimes it may be an aunt or uncle or something like the brother or sister that has that authority over that child.
Okay, what about this was one question that came in on my DM on Facebook about a father who pays child support, does not have custody, wants to know if he and that the custodial parent, which is the mom, can both get claim the child as a dependent.
Only one parent can claim the child, so they're gonna have to work that out. But it's usually the parent that has the guardianship, that's held as the guardian of the parent. If they have split custody, something, there are other specialized rules. If they have split custody and everything is literally, as far as economically split down the middle, there may be some exceptions to those rules, but usually one parent is considered the dominant parent, and that's, unless it's agreed upon, that's the parent that usually needs to carry that child.
Okay, great. What about a married couple? How do they file? Do they have to file separate? Do they always have to file together? And what about if they're not together but they're not divorced?
Okay. Those are several. Those are several categories. You have married filing jointly. They're married. They live in the same household. They're combining incomes to file one return. Married filing separately, meaning you are married, but you and your spouse are filing separately, and that usually occurs when you have spouses with Schedule C or businesses, LLCs, or things like that that they want to account for, that the other spouse may not either want to be associated with or have tax liability or anything like that. So those are the married filing separately. And then you have those that are estranged, they may do single. And so you have so many years, of course, by law, that you have to be separate. You have to live in separate households, separate, no shared income, really no shared property in the sense of like the main residence, things like that, or where you live together. But if you've been estranged for several years, there's no need to file a joint return or file married filing separately. In some cases, some instances, depending on the length of time you've been separated, you can file single. But in those cases, I just go ahead and say, if you've been separated that long, and you may want to go ahead and do the legal thing and get a divorce so that you can properly categorize yourself.
Okay, so let's get to and I want to answer this question again because I know people will start joining us later. But how do we handle the stimulus checks that were received when we're filing our taxes for last year?
A good question. And a lot of those, most people, when they got the stimulus, it is going to automatically be counted. Most importantly, a lot of the stimulus it's a bonus. It's a jump in. So you're not necessarily paying taxes on the stimulus. That's just kind of a boost for the economy. But at the same time, if you receive unemployment benefits, that is income and that will be added to you.
Okay, I want to make sure I'm understanding this. So if you received a stimulus check, do you count that with your payroll?
There is a good question. I'm looking at the form 1040 for 2020 on there, and there is a spot that will ask you, did you receive your stimulus check? Some people did not get their check, so it would become a credit, which basically gives you that, puts that credit, which is like, it's not a deduction, but what it does is reduces or puts back what your refund would be. If your refund is $100 and you get a credit, so now of $50, now your refund is more likely to be $150, where a deduction can kind of go into calculation of income. Long story short of the matter, if you got your stimulus check, that they already have that, it's not going to be taxable income to you. Okay. But if you did not, on your 2020 return, make sure you put in, there is a box on here that you do want to take. You did not receive your stimulus, like me, mine got lost in the mail and they sent it back. So now I have to check the box that I want to take my stimulus credit. And so
Okay.
whatever, they're going to add that to whatever my refund, or make that my refund at that moment.
Wow. And I know I'm firing these questions at you really, really fast because these are questions that people have already questioned me about, and I can't help you. But you did give me some resources, and I want to make sure that I put because you also told me about a resource that the Withholding Estimator.
Yes.
You want to talk about that and jump right in on that?
Yes, what that is in 2020, and many of you will find this out and are so finding it out. Excuse me, as you do as you're doing your 2020 returns, halfway through the year, during the last administration, there was less withholdings coming out of your income checks. So you brought home more money. So what that was just kind of a boost for you, so that at the end of the year, where you normally may have gotten maybe $2,500 in a refund, you got most of your income during mid-year of 2020. So whereas 2019 you got $2,500, 2020, you may get 700. And so I want people to be aware of that. And we try to send out as much communication midway through 2020, telling people to adjust your withholdings or exemptions so that you can go back to taking what you normally would come out of your check. A lot of people just enjoy that extra money. Thankfully so, because during the pandemic, most people probably needed it.
Yeah.
But I need their expectation to come back to, you won't probably get the same refund that you had in 2019. And some people may even owe. Shouldn't be a whole lot, but you may owe because a lot of people didn't go back and adjust those exemptions. What the tax withholding estimator is on irs.gov, individuals tax withholding estimator. What it is you go in and put your income. It's a walk through pop up, and you enter your information, and it will let you know if you withheld enough. You can look at your W-2 or your last pay stub, and it'll show you your final year's withholding amount, federal withholding amount for 2020. If they match up, you're good. You're safe. If they're over, okay, you can probably expect a refund. If it's under, well, depending on some other calculations in your return, i.e. credits or deductions, you may owe a little bit.
Okay, so it is 1:15. I need to pause and pay my bills with these advertisers that we have. So I'm just going to put up something so the editor will know, and we will be right back in just a moment. Don't go anywhere. All right, so they'll know where to plug in that first advertiser. So for those who just tuned in, I'm talking to the highly esteemed tax attorney, Madeleine Savage-Townes, and I will make sure you have her contact information. Don't wait till the last minute to contact her. She is already super, super busy and probably not going to take on too many more new clients, but I will make sure you have her information. Please send in your questions. Don't DM me. Just type them in the comments on this video on Facebook Live or YouTube or wherever else is showing, and I will make sure she gets those comments because I cannot keep looking at my phone. So I also want to talk from a business perspective. How does that stimulus check affect those whose business didn't make that money? Maybe they're self-employed and work a corporate job. So how does that $1,200 and then $600 affect a business owner, and how should they file?
Business owners, of course, we have what we call the schedule. It used to be Schedule C, in a sense. I think it's Schedule 3 now, since they've renamed a lot of the returns and worksheets. But with that, again, you're going to be documenting, because there needs to be a separation between your personal returns and what your business does. So the stimulus should have been strictly for your household. That was household-based, household income driven, dependents in your household. So that was strictly for the household. That goes on the 1040 individual, side of your return. Most of our businesses, if they got any type of stimulus, would have been probably from an SBA loan or grant and or the PPP. And we have had a lot. When I say our phone is blown up tremendously because of the PPP, a lot of that was the payroll protection program. They have, first initially when it started out, payroll, you were payroll for rent, for your basic needs, to keep your doors open, keep your employees employed. And then they've extended it out later to include contractors. But even then, I'm still a bit cautious because there's a lot of gray areas as to what a contractor is versus other things. So I've been very straightforward and conservative with a lot of clients and those that were applying for the PPP, because when they do the audits and when they do the reporting and when they do the recording, a lot of that is matched, especially with the PPP on small businesses, initially with your filings. If you have employees, they're going to match it to your 940, 941s. Your 940s is your quarterly employment payroll return. So if you had employees, those first, second, and third quarters, now fourth quarters, you should have filed those returns, which should match up somewhere near what your PPP loan, what you said that you needed to keep your employees in place. A lot of people are going to get in trouble. I already know it. Because the rules were not, made plain and clear at first. And I think a lot of that was kind of everybody kind of just driving into it and getting that money without really paying attention to the rules. And so there are a lot of rules that are going to come into play. I think you're on mute. Okay. There are a
Yeah.
lot of rules that are going to come into play when it comes back to the audit portion of those. So I really want a lot of my businesses, sole proprietorships, LLCs, Incs., whatever your entity, partnerships, to be very observant and start pulling your documents together. I do highly recommend finding an accountant, a bookkeeper, or someone to help you gather that information so that when you do file that, you are filing it properly, you have recorded it properly, and you have the proper documentation to support your request for those loans.
Wow, it's a lot this year. And I just would
It's a
not
lot.
want to be a tax preparer or a tax attorney this time of year. But that if you never had customers before, I can assure you you're going to have them this year because, and I don't know how people are handling that with, COVID-19. How are you scheduling it? Are people going to be able to go in person and file their taxes? How is that going to look like? What's that going to
Well,
look
a
like?
lot, yeah, a lot of it is we can do it online. That we do have confidential ways of transporting and transmitting documentation. Thankfully, the IRS is always or growing into more electronic filing and electronic reporting. With that, so that kind of helps with the paperless and the less contact. But again, it's going to be record keeping for most people and kind of organizing that documentation. We do take some appointments. I'm very skeptical, so we try to do as much as we can by Zoom, and then we try to just, like I said, do coded files to one another so that we can kind of get that information back and forth.
Okay. So, I noticed too that we have they won't start accepting the applications or the forms until February the 12th, which is later and later all the time now. So does that
Right.
mean that people have past the 31st to get their W-2s in, or that just means we're not going to look at forms? The IRS is not going to look at your tax return until starting February the 12th.
February the 12th is the start date for electronic filing and paper filing, but they prefer, they're going more and more into preferring electronic filing. That date is February the 12th. The last date for it, transmitting tax returns is still April the 15th. That has not been extended to date, but I cannot say that they will or won't. We don't know with the pandemic. So a lot of the rules are ever changing, but it's still April the 15th. If you file electronically by April the 15th and your return is rejected, then you have till April the 20th, which means you got it in by the 15th, but what some transmit or something happened and it kicked back or didn't feed all the way through, you have a couple more days, April the 20th, to get that return in, and it will be considered timely filed. For those that are overseas, you have until June the 15th to have your return in. If you're going to file an extension, that's the same date, April 15th, and then you have, for those overseas, extension filing date is June the 20th. June the 15th, and then if it's filed electronically, you have a couple more days after that. Most important thing is October the 15th. That's the cutoff for right now. If you file an extension, you want to get it in before October the 15th, because then afterwards, now your return is late because it's past the extension date.
Okay. So what about a dependent who's past 18? You can't necessarily get, the dependent deductions for them, but can you still carry a child that lives at home who's older than 23 but's
You
not
can
working?
you can carry them as not necessarily as a dependent. They're an adult child, but there are special rules for adult children. Certain rules, and the list goes on and on. But some things that come to mind are if they're in college, of course. If they're not working, they need to be working. But if they can't work for whatever reason, disability or certain things, they can be carried. Certain rules apply to adult children where you can carry them. You can also carry dependent parents, grandparents, something like that. But the rules are very fine, so it's always best to call the office or talk to a tax professional, or you can even call the IRS, and they will give you the check the box kind of deal to let you know whether or not the dependent can go. So the rules are kind of iffy, but if they are, most likely if they're a child, they're in college, they're not working, a full-time student. Those people within the rules can be counted as a dependent.
Okay, yeah, this question was from someone whose child was going to school, but because of COVID, they weren't, they stopped going to school and they're not working because they can't find anything, and they want to know if they could carry the child.
Right. And with the special rules of COVID, like I said, a lot of that, is in your gray area, but you have to treat them as if they were in school, because if it were not for COVID, they would be in school, right?
Right.
So those costs and things like that that you normally would carry, go ahead and carry them again, because a lot of things are going to be kind of flushed out in the system. So you really don't break up the system because of the pandemic. You're still trying to treat things as status quo.
Okay. So who should file a tax? Can we get some clarity on that? And what are the requirements? And because some people think I don't have to file a tax because I only made, a couple of $1,000s. I just work part-time, or I don't know. What's the requirement for filing taxes?
I'm going to say most income is taxable. Okay. You have exceptions to the rule, but most income is taxable. If you are working, earning money, cash included. If you live in Tennessee, we don't pay income tax, but most of those cases, pretty much, and I just tell people the rule of thumb: if you make over 600, and there are rules, if you make less than, or if you're on Social Security, some certain type of Social Security, you don't file it, things like that. But in most cases, we're able working people who just don't want to pay, don't want to file a tax return. I say file one. I mean, because even 1 year you may not make any income, zero return, because it is your duty as a citizen to file a tax return. If I don't make any money in 2020, I will file a tax return, and it'll be a zero return. But the next year I could make $10,000, and guess what? I'm going to file that tax return, because that's my duty as a citizen, U.S. citizen, is to pay and file taxes.
Okay, so we have a question.
Okay.
Just before we end this first segment, he says he has a LLC. He was not able to secure a PPP. He received a stimulus check. He files his taxes in October under a business account. He is 65 and also receives Social Security. Will he have to pay for the stimulus that he received? See, that's a big question for everybody. They think they got to pay something back.
Well, and this is stimulus. It is definitely an economic booster. Now, if you got a loan, that's something different. What happens is, let's say if I didn't earn any income for 2020, and all I had was my stimulus, I would not owe taxes on that. The stimulus is just what it is. It's a stimulus. It's there to boost the economy. It's not a loan. It's not a boost to your income. That was a stimulus pretty much given by the government to boost the market, to boost the economics, so that people will go out and buy groceries, or you would go out and pay, a bill or two. So it's boosting the economy, which does not make it a taxable event, right?
Okay. So what we're going to do, we're going to pause just for a minute in this segment, and we're going to come back and answer that question that the gentleman had. So thank everybody for watching the Loretta McNary Show. We'll see you very, very soon. Bye-bye, everybody. All right. Hi, everybody. Welcome back. Welcome back to the Loretta McNary Show. And yes, I'm Loretta McNary. And you see Attorney Madeleine Savage-Townes is still with us, answering more questions about taxes, stimulus checks, and who should file, what are the filing dates. And she is here to answer your questions. Part one was, we were answering a question from one of our viewers, and we're going to go ahead and go back to that question about the stimulus checks and if you have to pay it back.
And to answer that question again, the stimulus is a booster. It's a booster for the economy, booster for the households, to keep us from, starving, getting put out on the streets, whatever the case may be. It is not a taxable event. It does not create a taxable event to your income statement, to your tax return. It is what it is, a booster. It's a blessing to the household, if you will, Many of us didn't do it right, but we're going to talk about those at Walmart buy TVs
Girl,
and
and
things
at
like
Best Buy
that.
buying those TVs, but it's your money. It's
You
your
pay your
money.
cash card, but hey, if you needed that to get to work, God bless you.
Amen.
But those are the things that is a stimulus. Now, if they continue, I cannot say what they decide to do, but that initial $1,200, some people got less than that, and that was a question too early on, that I didn't get the full 1,200, I only got a portion of that. Well, that stimulus was based on income driven too. It was based on your economic needs. If you made 400,000, you may not have gotten one, but if you had children, you may have gotten one.
Yeah.
I had people that fell within that range that they only got $700. And I said, well, within your household, you fell in the range where you could get something, because some
Yeah.
people did not get anything, but you fell in the range where they kind of cut it out between zero to, well, I think it was 150. Don't quote me on that, but somewhere in that range. If you got over that, then they kind of start breaking down the percentage of what of that 1,200 you can get.
Yeah, because that was the most asked question when I was looking at, do I have to pay taxes on the stimulus money? So I like how you said it. It was a booster. It was a blessing, if you will, for us Christians. We know that was a blessing, right?
Right.
So don't worry about it, but go ahead and put it on your tax return that you got it. It's not going to take anything from you. So I'm just happy.
All that $1,200. Excuse me, didn't mean to cut you off. All that $1,200 is letting them know, did we miss someone? Because a lot of people did not get theirs that were qualified to get it. Wrong address. Did they have wrong address, the wrong bank account number? So there are people that qualify that still should have gotten it that did not get it. So if you put it on your tax return, whether I got it or did not get it, then of course that helps you, because they're going to send you that now back, because they now either have your correct mailing address on your return, or they have the correct banking information on your return. So things like that. So that is another way to help you put it on your return. You're not paying taxes on it, but it's just letting them calculate, okay, they got theirs, but Miss Josie down the street didn't get hers, or we missed someone, a couple people that need to get their, those out. Even on the last boost, a lot of people did not get them because they just kind of flooded them out. And of course, if you did your returns with a preparer that kind of, you all use the same bank account or did the early, withdrawals or things like that. And so that money went to that one bank account of that tax preparer who may not even be in business anymore. So you still did not get your check. And so you need it, but it's not a taxable event. It's just a booster for your for the economic growth of the whole nation.
Okay, that's good. So you said, show that form again, and where do they put that if they did not get it? I know you showed us the new form.
Yeah. There is what we call a schedule. Y'all, I'm getting old. I need some readers. It is on schedule 1 or schedule 2.
And I did not send her questions in advance, so she does not know what I'm
sorry,
asking or what you
I was
asked.
kind of pushing stuff off. It's going to be on your 1040, and it is going to be on your. Hold on, y'all. I'm still trying, because I was highlighting as I was looking. Schedule 2. It's going to be on your schedule 2, on under the adjustments to income.
Okay.
Okay.
And I love her because even when we were doing radio, she would have her tablet and her phone out when people asked her questions, and she wouldn't say, I'll get back with you. She just went through that stuff and knocked it out right then and there. And I want to make sure I have her information up there again, because you're going to want to call her and get some help, because I can normally do my own taxes, but this year I'm not going to try to do them. I'm just not, because with the LLC.
Yeah, and let me say this, because I was looking it up, and they've changed the dollar amount on what they call the free filing on IRS.gov. They have what they call the free filing networks or partnerships, so you can file. And it used to be really low, but this year they raised the dollar amount to $72,000. So if your household makes $72,000 or below, you can use the free filers. So they have some partnerships, and I'm not, they probably are the big names, TurboTax, H&R Block. I didn't click on any of those, and I'm not endorsing them. by any means, but they do have several partnerships that you can click on that you can file if you make your household's income is below 72,000. You can file for free. And they do have pop-ups that will help you along the way, so you're not giving away a lot of your refund. Because remember, it's going to be a little bit less this year in 2020. So they did increase the dollar amount for the free filer. So please take advantage of that as much as possible.
Okay, I want to give you a good comment. Monica Renee, my publicist out of LA, she says, "Thank you, Esquire, for helping us keep our money business in order."
Yes,
So that's
ma'am.
nice.
Thank you. I'll travel to LA anytime too.
Oh yeah, and yeah, she's also in Louisiana too. She covers quite a huge market for her clients, as you do. So let's talk about your background some more, because I'm just so proud of all you've accomplished. Graduate of Fisk University,
Yes, yes,
law
forever.
degree from the Cecil Law, and extensive stuff in DC. And so tell us about that, because you are highly esteemed. Tell us
Well,
about some of
thank
your
you.
background.
Well, it's really, I take it as a blessing because I am compassionate and passionate about what I do. I have a heart for and passion for, small businesses, people that really don't, because tax is a world of its own. And most of us don't understand it. And I've seen a lot of businesses, a lot of people, a lot of my clients, a lot of nonprofits get taken advantage of because they did not understand. Even the IRS of the government bullied them in some kind of way, which is why I represent. I'm on the other side. I don't work for the IRS, but they are a resource for us that we don't necessarily use because it's the IRS government. But I am a very good advocate because if you don't understand the system and you can't explain your situation to the IRS, they are going to put the hammer on you. They do have collection and revenue officers that act as regular police officers that will come and seize your bank account or levy your bank account and put a lien on you. And so that kind of watching people lose businesses and close down businesses and lose homes and things like that was very disheartening to me. And so I wanted to find out, how do I help? What do I do? And so that's what pushed me more and more into tax. And plus, that was not an area that African Americans or minority women were in. Most of my classes, I was the only one. And they would look at me like, why are you in here? And it's like, why not? I want to learn too. I want to know what everybody's learning, or, learn things that and I just be honest, my people wouldn't be privy to on most cases. And so it's one of those, I want to soak it all in. I want to learn it. I want to get it. So I learned from most of my mentors are big, CPA people out of New York and Washington, D.C. and things like that. And here, this little country girl from, the South coming in, with this high attitude and colored hair, trying to figure life out. And so it was one of those, but it was one of a self-esteem booster to me too, because I realized we all were learning. We all were
Yeah.
learning at the same time, and I could give them a different spin. Even when I was on the IRS advisory board, I could give them a different spin from speaking about small businesses or minority businesses that were not getting the opportunities or were not privy to the even just the basics of how to set up their business, but you want to come and shut them down. And I'm like, how can you punish them when you have not educated them?
Ooh,
And so
girl, preach.
that was a push for me, being on the inside of that, being on that board and being able to speak up and say, okay, wait, you're setting these rules and these penalties in place. But again, what have we taught them? It's one thing to go after the big fish and, people, converting millions of dollars. But if you have a small business that owes $20,000 in self-employment or in payroll tax because they chose to pay the rent and the lights and pay the employees, and they couldn't pay the taxes at that time. Yes, that's the role of a business, and we hear it all the time. But at the same time, it's, have you taught them how to even do business? And so that's where I come in. Though I fight, and we fight over penalties, and hey, let them settle, and they're going to do right, and we fight about that. But it's kind of giving the IRS the other side of the table to show them, okay, you can be a little bit more compassionate And so a lot of the fight, even in 2020, has been, hey, you want to do this collection and hard seizure on businesses, but these people are hurting. And so, I'm not going to let you come and close down my client. And yeah, I'm going to fight tooth and nail, and I'm going to file a whole bunch of stuff and get on your nerves. But that's going to give my client the time they need to try to build a revenue or us build a business plan so that they can stay on top of their taxes.
Okay, and I also want to mention that you hold the record for being the first African-American woman to serve as the vice chair of the Shelby County Land Use Commission Board of Tennessee. And you were personally appointed by Mayor Mark Luttrell of Shelby County and confirmed by the Shelby County Commissioners. She holds a lot of titles, and she's so humble, I'll say. But if you ever just look her up and spend some time with her, you will see she's really brilliant when it comes to law and accounting. And she serves on a lot of boards. She does a lot of nonprofit stuff. She's a philanthropist. So when I say she is highly esteemed and qualified to do this, and you just heard her, she will fight for you. If you are in the right and you were doing what you were supposed to do and this happened to you, you got a friend indeed, honey. To quote from the Toy Story movie. We have some more questions. Monica has really brought up some really great points. She says, what type of tax credit, and I'll put it on here, maybe you can see it. What type of tax credit can someone get from donations to a self-supporting organization?
Monica, you read my mind because I did pull some stuff on nonprofits. Because I do help with the nonprofits. A lot of the charitable organizations, as we call them, there are tax credits that are out there. Now, let me go into this. There are rules to, deducting your charitable contributions, as we call them. Now, usually before the CARES Act of 2020, you had to itemize. This year, 2020, for the 2020 return, they're going to allow you to make deductions, even if you don't itemize. But the caveat is the maximum for if you do not itemize is $300. If you do itemize, of course, you're going through the normal charitable contribution, Schedule A, Schedule 1, breakdown of, what cash charitable contributions or in-kind donations or things like that. So they will break that down to you. But there are deductions allowed this year for the 2020 without itemizing.
See, I told you she's so thorough. She is all. How do you know what people are going to ask? I guess it's just only so many questions. But okay, so what are a few deductions that go overlooked by entertainers or somebody like me? Can I file hair and makeup because I am the brand? Can you talk about the entertainment law for a lot of spoken word artists and those who perform, or even creative artists, or let's talk about that because that's a great question.
And thankfully, so they still kept that deduction for your reservists, performing artists, things like that. They did keep most of your deductions for your regular households have been removed there are some exceptions. But for your artists, entertainers, things like that, they have left room for you to be able to deduct. Because, of course, a lot of what you do is building your brand. It's part of your brand. It's part of your business, whether it be your look. If you have a certain look that you have to keep up with, and that goes towards the process of your brand, which is your business, which gets you jobs, which gets you, if you're an actor, gets you the acting, that's how you earn your income, then those could be possible deductions. So if I'm an actress and I know I have to pay for hair and makeup, and that's a part of my brand, which I always suggest a lot of my entertainers become an LLC or things like that, so that they can really legitimately take those deductions, because that's a part of Madeleine Savage LLC, because she's a superstar. So my hair, makeup, nails, clothing, things like that to produce that brand, which ultimately gets me a job of the movies, that's my income. So then those become deductible expenses.
Okay, so those are kind of common to people. What are some of the ones that we may not know about that are deductions for entertainers or people in the, in something different like that, not a corporate job, but a business that's not a normal day-to-day thing?
Well, and it's ever growing, but a lot of it has to do with, of course, now we're dealing with the age of digital world. So, do you have to build a web page? Do you have to build, is there a certain new look you have to do? If you have to take on new expenses to build this electronic or digitized version of you. Some people, of course, if you're a musician and you have to consistently buy, new parts or things to your instrument and things like that, those are deductible. If you are a composer and you're writing, and okay, you have to do ink and paper and whole. If you had to, build a whole certain type of box that holds your papers, so that you can read them in this certain different. I mean, it's kind of open ended sometimes. So I'm gonna say sometimes for artists, but if you can relate it back to how it helps you derive income, right? If it's an expense that helps you derive income for whatever that is. So if I'm a artist and my art is, I do art, with grass. So I'm having to, order all kind of guys, go outside and cut the grass or whatever the case may be. That's a different type of art, but everything I purchased to create this art and then I sell that piece, that is derived income for me, but there was a lot of expenses involved. So I always think of, is it going to bring me income? What expenses did it take for me to make that income? So that's really a lot of artists how, because we can go a whole long list of, is it my hair or is it my shoes? But is that part of your brand for that particular artist? If you're a book writer, and let's say you only can write in, a water surroundings because your books are about water, and you have to take trips, you have to travel, and that's the only way you can really. But that book generates your income, but those expenses that go towards generating that income, in most cases, are deductible for that.
Okay, so this is a good question. If you work a corporate job and have a business, how do you file your taxes? How,
Okay, with corporate job should issue you a W-2. So that's going to go on line one of your 1040. But if you have a separate business, hopefully you have a separate EIN or tax. If not, your sole property, you use your social. However, if they're issuing, if you're working and let's say you are a contractor and you cut grass for, that's your exercise job and you're working for people and you cut grass, and let's say you charge $600 a watt. At the end of that year, whoever those clients are should issue, and sometimes they do, sometimes they don't, because you are considered a business, a 1099. That 1099 would go on what we call your Schedule C. So you need to have two separate reportings. You don't combine them in one because there are two different sources of income that are treated differently. Your W-2, they're going to look for withholding taxes, federal withholding taxes. If you're in a state that's income driven, state income taxes, withholdings, and Medicare, Medicaid. So all of that's going to go on that corporate job income, or should come out of that. Your Schedule C, there's in most cases no one's withholding taxes for you, right? So the government looks for you on an honor system in most cases to report that income, and you pay what we call self-employment tax on that. Some people will go ahead and know, I'm going to normally make about $10,000 in my side business. So each quarter I'm going to pay 13% of that $10,000 in estimated tax payments. So when I do my tax return on that Schedule C, I'll list all that income that I made from that side business, deduct all of my deductions. So whatever it took to run that business, the cost to make that money for that business. And then I'll go in and deduct more of my estimated tax payments. And then that should be either my refund or the balance I have left on that Schedule C. Now on my W-2, if I withheld more than enough, I should have a double refund and it all comes together later. But they definitely need to be reported separately.
okay. So more information, contact her. I have another question. It's twofold. How many times can you take a loss on a business, and can you report back taxes in how many years?
I'm going to go to the loss question first. Yes, you can report a loss. We usually try to suggest not reporting a loss. Sometimes it may take, they give you the rule 5 to 7 years to make a business kind of turn a profit. After 3 years, we really start looking kind of at your business structure and start thinking of maybe another way to either add another revenue stream. Because if you start carrying losses too long, it's going to come up. It's going to raise a red flag, which is going to cause an audit, which can cause an audit. So we try to suggest that after that third year, we go back and look at that business model and make sure you're doing the right. Because if you're running a business always losing, that may not necessarily be the best business for you. Now, there are instances where corporations will buy a business as a loss. That's usually because they're making money and they still want another tax deduction. That's another whole level, another whole show. But in those instances, they do buy up a losing company to offset money that they're already making.
Okay.
The other question, as far as multi back filing, you can file your taxes. If you're 10 years back and haven't filed, file your taxes. Some cases, the IRS are now filing them for you, and you don't want that. You do not want that because they just file it strictly on income, no deductions, no whatever, and then they'll send you a bill. Always file. However, in that filing, you have 3 years from that filing date before you can claim a refund. So if you know you owe a refund for 10 years, those first 7 years, you're not going to get it. Just so sorry, you should have filed your return. But 3 years you can claim up to for your refund.
Okay. So I want to ask this question too, just because we were talking about being audited. So you as a tax attorney and a client comes to you, you didn't have anything to do with these taxes, but they get an audit. Will you still represent them?
Yes, and that's normally what I do. I really don't try to do tax returns to avoid the conflict of interest that I'm trying to represent the return that I've done, because usually I'm the cleanup lady. They usually go to someone that has not done their return very well, or they just could be going through a regular audit. And they had a good preparer, but the preparer's like, I don't represent for the IRS, I just do the returns. So they come to me and we gather the documents. I review, most people just even bring their returns to me just to review before filing, just to make sure that they have all the deductions, they've gotten, it's done properly. And sometimes we find stuff is missed and they, missed a credit or they, didn't get a full deduction. Because I always ask them certain questions that we do. And so when they go to audit, we prepare them. And then what good thing about me, and opposed to other accountants or things like that, not to knock them because I have wonderful accountants as friends and I even have good accounting, but I can take it all the way up. So if we don't like the audit results, we appeal. I don't like appeal, then I can still keep going without changing all the way to tax court and then on other to federal courts. Should we not like the answer, or should the answer not be clear enough that it is in the best interest of both parties? Because of course I want my client to win, but in some cases there are some instances where they actually owe the taxes, and then we fight about how do they get them back. And so that's where I come in as a tax attorney, whereas some accountants or enrolled agents are stopped at a certain level, whereas I can go in as a tax attorney and go in the tax court and represent them all the way up.
Okay, I have a question from somebody else, but somebody actually took the time to type in a question, and I want to ask this question. If we have time, we have 5 minutes left. I want to ask a question about what people should do. The first thing that should happen once you get a letter from the IRS, and how to know if it's truly from the IRS, because we know there are a lot of scams trying to get
Right.
people's money. So I want to address that. But Wallace had a great question. He says, what experience do you have on land and property taxes? People of color are subjugated with high taxes and the appeal process is denied. Very common in small towns.
Mm-hmm. And we're finding that, unfortunately, and I've actually worked on a couple of cases in Mississippi, not calling out, but Mississippi and, some Tennessee cases where that is the case. That is a monster that we're all kind of trying to take a bite out of. But what we have found, a lot of it, and the fluke has come in when it came to the other side, the governing entity was the record keeping. Some properties had passed to different heirs. Some people didn't get sufficient notice of taxes or tax sales or things like that. One thing I do on a regular basis is we do property redemptions. So if your property was sold in a tax sale, A lot of people come to us, I didn't know, I didn't get notice, I didn't, but you do have a period of time, depending on the length of time and the amount of delinquent taxes to redeem that property. And a lot of people don't take advantage of that, which I find, especially in our community, once it's sold in tax sale, they feel like, it's gone.
That's because people don't know. I personally
Right.
know some people that happened to. They had no idea they had a year to get the money together and get that property back, even after it had been sold.
Exactly. And even there are exceptions even to that rule. So, and that's where, again, I fight. I get in there and we work with, the county attorneys and things like that, and even the purchaser, because a lot of times they're aware that they, don't have free and clear title for a year, or, whatever was longer last year. But, they just hold it and hope that no one's raised their hand. And we usually don't. And a lot of times we don't even owe a lot of taxes on that property, and the property is $30,000-$40,000 home or family home. It has heritage and family value, but because we get so afraid and we just stop the process, that we don't follow through with it. And that's kind of where it's like, just call somebody. Hey, is there something I can do? And even if you call the tax office, in those cases, a lot of times they will say, hey, we can't help you necessarily, but hey, contact a tax attorney or contact this. And a lot of people are like, I didn't know you were here. And it's like, I'm here.
I know. That's why I was like, I got to get Madeleine on. You're like the official tax attorney for the Loretta McNary show. I've had no other tax attorney on my radio show or my show. So you're my official tax attorney. Even though I haven't had to use you, and Lord knows, I hope I don't. But if I ever have to have that, if I get audited or whatever, I am confident that I will hire you and that you will help me, girl.
Yes, we will fight. We will fight. I probably have some enemies downtown, but that's okay.
Winners have enemies. So that's pretty much our time. But if you do get an audit letter from the IRS or somebody pretending, please contact Madeleine and let her walk you through that process. Don't be afraid, because you still have time if you just got the letter, right? So you don't have to like fret and make your blood pressure rise up. Tell them, Madeleine, they don't have to do all that.
They don't. And if you receive a notice, and I'm very careful about that, because there are a lot of scams out there. If you receive a call, I can tell you right now, that's most likely not the IRS. They're not going to ask you to put things on a debit card and mail things in. They're not going to do that. Most of the time, they love killing trees. They're like me. They have a bunch of papers that they're going to send you in the mail. Even with that, there are certain codes and certain formats that are truly what we call IRS official letter. So a lot of times people will call me and say, I got this letter from the IRS, and I'm like, look at the top right-hand corner. There's going to be a code or a letter number. Does it have that? No, I said, throw it away, because they will have certain codes. For us, that kind of tells us where they are in the process, but it also is an identifier to us or to the world that this is official. And then a lot of times they'll tell you, call this number back. If it's a cell phone number, if it's not a 1877 or something like that, then I would say no. And if they're asking you to verify information that they should already know, they won't fight you over that. They're like, okay, I understand. Or you'll say, hey, you do happen to get one. They may follow up on a letter, because they will reference a letter that they've sent to you, then ask you for information. I said, they're not going to come out straight out and say, give me your social security number. That's not the IRS. Do not give them that information. Even now, they've gotten so that they've sent that information from your localities, talking about your property tax. We're coming to seize you, or we're coming to get your bank account. Just call your local office, give them your address, and they will let you know whether or not they've sent you a notice or something like that.
Okay. Oh my goodness. I cannot believe we've already did 2 shows, and I have a ton more questions. You'll have to come back.
I will come
because
back.
like Monica said, we have to protect our investments, and there's a way you can fight. Don't just lay down and say, oh, I lost this, or they're going to do this, or I didn't pay this, or I'm in trouble. There's always a recourse. The law is on your side. You just got to know what it is. And when you're not, when you don't know, you get penalized. So Attorney Madeleine Savage-Townes, girl, phenomenal job today.
Thank you. Well, don't forget, February 12th, start your filing. April 15th is the deadline for extensions or final returns on time. October 15th, final deadline for 2021. All right.
All right, and don't be afraid about filing that stimulus check money. It's okay. It's okay.
Yeah.
All right,
Yes.
we'll get her back and just start sending your questions to me. I'll get them to her, and I've had her number on there, so you can call her. She is accessible, and like she said, she'll fight for you.
I
All right.
will.
So in closing, and I'll fight for you too. So in closing, like I always say, think positive, dream big dreams, help someone
Yes.
along the way, and we'll see you very soon. Goodbye, everybody.